Balasubramanian, Chief Executive Officer of Birla Sun Life Mutual Fund, joins us. Bala, good morning. Thank you for joining us. Bala, even though Nifty is at an all-time high, no one is feeling happy because there has been hardly any participation, and participation has been in IT and pharma, and those two sectors are down.
Yeah, I agree with you, Nikunj. I think while the level of participation has been poor in the last many months, I would assume. At the same time, I think we have been noticing a trend. I think since November, I would assume November, December, even January, we saw actually the net inflows coming into the mutual funds, which nothing but reflects one, the belief, yes, the equity as an asset class will start driving actually the growth, and second is the level of confidence which is coming back into the equity asset class. We measure it from two angles. One is of course the inflows, second is the level of the redemptions which gets of course reduced. So I see in both the sides there has been a significant change that we are noticing in the last 3 to 4 months. As you rightly put it, clearly I think the level of participation is, though it's not been very large from domestic investors, which we believe that as we move forward, as we start gaining some kind of confidence from two angles. One, the level of conviction that come from the overseas investors to invest in India, which is I think we are seeing that flow is coming from overseas investors only on the back of one single most factor, which is the currency volatility has reduced significantly. We have seen a significant improvement on current account deficit and balance of payment surplus, and the kind of inflows that is coming from overseas in terms of dollar flows is keeping actually the overall rupee dollar at a very stable scenario. And combined with that, the bit of the positive vibes that is coming for India as an economy, with the assumption that we are at an inflection point, we could probably see actually an uptick coming in as we move forward once we have the stable government comes into place. That's why I think our assumption is the recent trend of last 3 to 4 months is nothing but an indication of the beginning of the conviction coming back towards putting money in equity.
Bala, hi, morning. Retail clearly has been amiss from the market. What we've seen in the last 2 weeks has been FII participation which has picked up, and they've been net buyers on a daily basis. What's the sense that you're getting as to when would retail come back, and more importantly, would the FII sentiment still be positive on India for, the next 2 months till elections?
Yeah, I think from a domestic investor's point of view, probably the assumptions what I would make is the trend that is getting established will get of course further boost the confidence of larger participation coming to the market. That's one. And second is there has been increased level of realization that only asset class where I would assume that most of the investors today is underweight is in equity. For obvious reasons, the last 4 to 5 years, given the slowdown in the economic growth and given the high level of volatility that we have witnessed in the economic growth itself in various parameters, has actually taken away the confidence from the investors. But having said that, at the end of the day, it does not take much time to come back. As long as you are, I think, confidence coming back, the conviction is coming back. Yes, one need to remain somewhat invested in equity. So that I see actually would probably be something written on the card. I think it will come in probably faster than what all of us have been expecting. And having said that, I think clearly from the emerging market point of view, there is the kind of inflow that is coming to the emerging market. We would assume that we will probably gain more momentum. Historically, if you analyze the trend, it's actually been coming between June to July, August and September. That's the period we see actually the bulk of the inflows coming from the overseas investors. Though the normal assumption is always comes in the month of Jan, February, March, but historical trend actually says something different. And it also coincides with the election outcome, which is likely to be in the month of May, and the emerging market flows also will step up between the June, July, August period. We would assume that probably India would be in a better position to get the large chunk of the emerging market, given the fact that most of the economies in emerging market, what we get to understand, what we get to hear from most of the global economies is that India is gaining more and more advantage compared to some of the other economies such as China and few other Asian economies. And that's why I think we will probably see the increased allocations coming into India, mainly from the simple single factors that people are overweight in China when it comes to the question of emerging market investment.
Bala, stay with us. Let's take a break. L&T clearly is the big mover, but now State Bank of India, Reliance, and along with that you've got Punjab National Bank, which are also giving L&T some company. Well, apart from L&T, now private banks and PSU banks are also joining the party. SBI is up more than 4% and ICICI Bank has appreciated by about 4% plus. 1640 for SBI, and for ICICI Bank the number is almost 1180. It was sub 1000 6 weeks ago. So it's been a one-way ride even for banks, and these are big banks, big market capitalization, big weightage, big FI ownership. So I guess institutional investors have nothing to complain if you bought into private banks. Bala, let's stay with cyclicals because that is the big story. What is the right way to look at cyclicals? Because large cap cyclical stocks have appreciated by about 30 to 40% from the recent lows. Do you think now down the ladder cyclicals will also move up?
I think interestingly, Nikunj, in the last 6 months, the cyclicals have come and gone, in the sense that the bullish view was formed on cyclicals some time back, and then it is died down and then again coming back. But if you look at cyclicals from two angles, one, the banking and financial services sectors is largest among the cyclicals. It will participate in any economic recovery, and the hope that could come back on economic growth will participate. We will continue to remain somewhat bullish with respect to the banking and financial service sectors. But the challenge always remains within that, how do you go about picking the stocks? And that's actually the challenge has been there for last 3-4 years and will continue to remain so even going forward. But as a sector will continue to remain one of the dominant player within cyclical sectors. But other cyclical sectors, if you look at it, they divide into two parts, which is the capital goods sectors and power sectors as well as the metal sectors. But again, some of them, if you want to look at it very clearly, in the last few months, there has been some kind of fundamental changes that is coming, actually hitting the power sectors, which are more in the nature of ensuring that they are able to operate the plant in such a manner and produce power, which are the recent guidelines which has come from CRCs allowing to increase the prices. But that definitely actually they're all the news in the right directions with respect to coming back to those sectors purely on the basis of the fundamental change that we are witnessing. But some of the other sectors which participate in the global growth as well as the domestic growth, which is the metals as sectors, though they participate in the global growth, also one need to look at from the point of view of asset valuations, including the domestic cyclical sectors such as cement. But any, I think, recovery that we are expecting to happen post the formation of the government as well as some of the policy framework which would come more towards driving actually the economic growth through the investment demand picking up, definitely I think the cyclical sectors would play out quite well. But how to play these cyclical sectors is actually will continue to remain a big challenge, more from the point of view of one, choosing the sectors. Second is actually choosing the stocks within the sectors.
Let's see what Tata Motors is up to. JLR, by the way, Nikunj, has signed David Beckham as their China brand ambassador. Do you think that'll help?
No, David Beckham nowadays is popular in China. I can vouch for it.
Oh, he's bigger than JLR in China.
That was when he was playing playing for the European clubs. Now, ever since he's gone to US, I think it's no longer that David Beckham effect now. They track more football, I guess.
I would still refute that, but anyway.
Okay, Bala, I won't ask you a question on JLR, Tata Motors or David Beckham. Tell me your top 3 holdings.
Of course, we have been, of course, somewhat overweight, rather neutral weight to the banking as a sectors. Instead of going to the stocks, even some of the names what you took, like ICICI Bank, or the earlier you took the name, we have one of the largest weight in the ICICI Bank, which represents the large weight of the index. And some of the sectors within the capital goods sectors, we have been playing it through the large players in that segment, which is Larsen and Toubro. And the same way, if I look at it, the sectors within the pharma, though the one may consider actually the valuation is costly, but within that we do have where we have the high convictions still on the basis of the earnings, which again reflects in some of our portfolio. Rather than going into individual stocks, where we have been largely focusing on within the sectors, choose actually the right stocks which could not only give return to the portfolio manager from the portfolio point of view, it also gives helps in terms of sustaining the portfolio performance over a longer term.
Bala, what about stories like Tata Motors have a global exposure which has been helping surfacing, Tata Motors out of the woods each time? It is the JLR sales which have bumped up the stock. But now that the trend seems to be, reversing and now changing towards more rural, domestic economy-led plays, would names like Tata Motors as well become a profit take / sell?
I think one of the interestingly the sectors where we as a fund house have been quite bullish for quite some time is the auto and auto ancillaries both put together from two angles. One, some of the large players like Telco has been gaining out of the diversified exposures business what they have built by having the right balance between the global the business as well as the domestic. While one side you have the domestic cyclicals have been under pressures in the automobile sector especially, they have been gaining some kind of strength out of the international exposure what they have. Having done that, I think there is a clear the bet if one has to take on the economic growth coming back, which also they got that kind of confidence from the water account budget, which also gave some kind of a booster for the automobile sectors by making some kind of adjustment on the excess duty, which itself actually shows that in one sector which could help the economic recovery back to normal by increasing the consumer demand by which could happen potentially by reducing the prices at the same time increasing the volume. This one sector actually is quite ripe with respect to actually participating the cyclicals when they come back, and clearly that's where we see most of the automobile companies within the automobiles, the auto ancillary companies have been the biggest beneficiary of the recent boom what we have seen actually with respect to the car sales numbers. I think the question of time for the commercial vehicles segment, which is actually largely prone to the economic activities. But any level of pickup that we would probably foresee in economic activities, the sector I think it could probably start discounting the expectation which I would assume is the commercial vehicle segment.
Right, Bala, so are you planning to book out of some of your IT stocks? Do you think somewhere in terms of a risk reward ratio, IT may not offer very superior returns?
I think again Nikunj, this sector has done phenomenally well since the time the outlook on rupee was somewhat different from what most of them had predicted, and even now if you look at it, given the fact that we have seen actually a temporary stability that has come on currency movement, we can't completely say that we would probably get into the bias of appreciating bias. We will probably see a stability, we will probably see the forward premiums getting stabilized, and we may probably see the marginal drop in the forward premium. At the end of the day, the risk premium for the country will remain somewhat in some sense keep the rupee dollar rates somewhere between 60 to 63 kind of range. And that being the case, with the economic growth that is coming back, not just only in the US, even in the European economy now is talking about the economic growth will come back. If that's the case, which I think we are going to see, I think the exports driven economies, export driven stocks, which includes IT as a space, will continue to probably give an outperformance to the overall market. That's the way one has to look at it. But within that, definitely as I always keep maintaining that one has to choose the right stocks. There was a period where we as a fund house chose not to invest in some of the large cap names despite being the large players, given the fact that ultimately the fundamentals have to justify of investments in these sectors and companies. But that I think will continue to be the trend even going forward.
Bala, my co-anchor Aisha just pointed out how much markets have moved in between Valentine's Day and Women's Day. Should we be mindful of the election day now?
Why do you feel that this show is more about me than the markets, Nikunj?
No. Just that such an important comparison you told me. So I want to ask him about one more important day, which is the election day. And Bala, what happens on 16th of May?
Yeah, exactly. I think that is why I think I would assume that the Indian investors have to realize that one, timing in the market is extremely tough, and second is when things are changing and the tides are changing in favor of equity asset class, and there is always likelihood of people jumping actually and investing in equity, and that's why we have been actually as a fund house have been making a noise for quite some time that it's very difficult to actually predict what could be the outcome. I think the outcome is actually going to be favorable as it happened the last time as a surprise. We will probably see the more and more convictions coming from overseas investors, which could put actually the Indian investors a bit in the behind. So we have been actually quite gung-ho and bullish that one has to build an equity and asset class, especially at a time where the things are at the bottom, interest rates are high, inflation is high, and we could only see actually better days ahead as we move forward.
Okay, Bala, good having you on the show, and thank you so much that you could take time out and join us, and I hope your and Nikunj's idli date happens soon. I've been hearing about it for the last 3 years.
I've been planning to go from last 3 years, but difficult to give work a skip. During market hour, difficult for me to do that. Maybe on one of the weekends I'll go with Birla for this proposed South Indian breakfast we've been planning. Bala, I hope you plan soon. Enjoy your day and thank you for joining us. Okay, let's go to Ashwini Gujral. And Ashwini, what's on your watch list for the rest of the day?